Are you facing foreclosure and think you have no options? Well, think again. That's what we're going to talk about today on Just My Opinion. This is Jessica Duncan's Just My Opinion, and I'm Jessica. There's no handbook to owning a home. That's why I go beyond the transaction to share my opinion, tips, and insights for adulting made simple. So you think you could be facing foreclosure, you know for sure you're facing foreclosure, and you really think you don't have any options. That is absolutely not true. There are tons of options, and we're going to talk about what your options are and different situations today so that maybe if you are in this situation, you can make a good decision. So first of all, let's talk about what is a foreclosure. So foreclosure means you are behind on your payments and you have probably received some form of notice from the bank that you are in default. You probably know you haven't been making your payments, right? So used to, you could go like a year without making payments before they would ever even attempt to foreclose on a house. Here lately, that has not been the case because we don't have many foreclosures. They're moving pretty fast. I'm seeing, 3-4 months of not making payments, and they're already starting to get attorneys involved pretty quickly now. So if you are in this situation, it's something you don't want to ignore. You definitely want to address it, and we're going to talk about what those options are. Let's talk about how you know you're in the foreclosure process and how you know you really need to start getting busy. So you could have been served paperwork that says, hey, you have so many days to get out, or your property is being sold at the courthouse steps on this date. You probably at some point also received notice of lis tenens. What that means is there has been documents filed with the court of a lawsuit against your property. It's a Latin term that means suit pending, but basically it means you are in jeopardy of losing your property because you have not made payments or you're behind on payments. And like I said, this can only take a couple of payments before they start this process. So you may only be 3 months behind and they could start the process. The process can take a while though. The bank has to jump through a lot of hoops and make sure all of their paperwork is in proper order. So it gives you a little bit of time to do something, but you don't want to sit back on your heels on this. You definitely want to come up with a plan and make sure you are communicating with the bank and doing something before you lose this property. So a lot of times what I see happening is people think they have no options and they just sit back and go, well, there's nothing I can do. I'm just going to lose the property. And when that happens, sometimes they lose money. They lose equity that they have in the property. And I've been able to help several people in this situation over the years and really put them in a better situation. So I'll give you a good example of when this happened. I had a lady who called me. Someone referred her to me a couple years ago. She was going through a really bad situation. And luckily a friend said, look, just call Jessica, see if there's anything she could do to help. Well, the person was going through a divorce and her husband owned a business together. So not only did she lose her job and her spouse, she was now losing her house. The mortgage was just in her name, and she thought her soon-to-be ex-husband had been making the payments on it, and unfortunately, he had not. And so she was served a notice that her property was going to be sold on the courthouse steps, and so she thought she had no options. Luckily, this friend told her to call me. I went out there quickly. I'm like, time is of the essence. I got with my title company to find out if it had been put on the docket yet to go to court. And what that means is this on a judge's schedule yet? Because if it's on a judge's schedule, then I know exactly how long I have. If it's not on the schedule yet, then I know, okay, I got at least 60 days, but that helped me determine how long I had to act. Luckily, we were able to see that it was about 60 days out. So we quickly implemented a plan. And what I figured out is this woman had over $60,000 in equity that she was about to walk away from. And we were able to do a couple minor repairs that needed to be done to the property so that it could be insured, get it on the market, get it under contract, and get it closed all before it went into foreclosure. And instead of having a foreclosure on her credit, she ended up with $60,000 in her pocket walking away from this awful situation. And what a nice little nest for her to start over her life again after everything that had happened. So there's options. So if you're in this situation, continue listening and we're going to talk about them. So the first thing when you're trying to decide what is your option, what is in your best interest, you want to figure out, why did this happen? Is this a temporary situation? Did you have a health issue that maybe you were out of work for a short period of time, or maybe you were laid off, but you've already been able to obtain another job? Or is this situation something that's long-term, or is it something that's short-term that you're going to be able to overcome? And that really makes a difference on how you handle it. If it is short term, maybe it's just, you know what, it was a 2-month thing that I was laid off or had a health issue, but I'm back up and working now and things are improving and it's not going to be an issue anymore, then there's certain ways you can handle that. And one of those is to call the bank and negotiate. So many people did this during COVID. A lot of the lenders would allow someone to take 6 months without making any payments. So you can call the bank and say, listen, I got behind. Here's my situation, but here's why I'm back on track now. Will you work with me? What you really want them to do, though, is make sure they add that amount to the end of the loan. During COVID, what we were advising clients on is a lot of them were just taking it and taking 6 months worth of payments and making it due in 6 months. Well, if you didn't have it those 6 months, you weren't going to have it at the end of the 6 months, right? So that was setting them up for failure. Luckily, we were able to talk to every client that we know of that tried to do that and say, no, no, no. What you really want to do is try and put that at the end of the loan. Try and negotiate and get them to put that at the end of the loan. So basically extending your loan by 6 months instead of forcing you to come up with it in the next 6 months, because it's probably going to be hard to come up with that much money in that short of a period of time. So if you're in this situation short term, I want you to call the bank, be in great communication with them, and try and see if you can negotiate this. Tell them your situation, tell them why it's changed, and try and get them to extend it. You would be surprised how many actually will. They don't want to foreclose on you. They want you to start paying your mortgage payment on time. So if you can do that program, work with them, and come up with a system that's really going to work for you, just make sure you understand all the details and don't forget that it's there. So what do I mean by don't forget that it's there? Sometimes banks will put like this silent second mortgage, or they did this a lot during COVID. They said, you don't have to make any payments for 6 months, but we're going to put this silent second mortgage at the back of your loan. So if you ever sell, it has to be repaid. Well, then whenever the title company was pulling payoffs, it may not have shown up. And there's been several recently that have come up where the people have already sold the house and didn't know there was an additional $35,000 that they now owe that they weren't aware of because of the delay and paperwork, unfortunately, for the government to do in those programs. So make sure you understand what you're getting into. If you ever do go to sell, you want to be prepared for that. That way you don't get a phone call one day or find out right before closing, actually, that's not your payoff. There's an additional amount here and you're not going to walk away with the proceeds that you want. So make sure you understand that. Negotiate it on the back end of that loan. Try and keep, your same interest rates and things like that, because hopefully you're in a good interest rate position. You probably will not be able to refinance or to take out a second mortgage to cover it and catch it up because you're behind, right? So no one's going to loan you any more money until you get this up to date. Now, if this isn't a short-term situation, maybe this is a long-term situation. Maybe you had an injury that you're not going to be able to continue to work your previous career and have the same income. Maybe your life situation has changed. Maybe you had a child or a divorce, or there's so many different situations that could have happened. But ultimately, your life situation has changed, and this is not a short-term situation. It's a long-term situation. So if it's a long-term situation, we need to figure out a long-term solution. And there's a couple different things you can do. One is similar to the case that I told you about earlier. Look at the equity of the house, talk to a good agent, and find out how much equity do you have in the house. Could you sell the house and walk away with some money in your pocket? Maybe even work on buying something that is less expensive so that you're a little bit more comfortable with your payments each month. Or maybe you have enough equity you can even sell what you're currently in and pay something cash so you don't have to worry about that monthly payment. But start by looking at how much equity do I have in the house and can I sell it to be able to get that equity out. Now, sometimes we're in a situation where maybe there's things that need to be done for insurance. Maybe the condition of the house is not insurable or financeable. And that's what we're seeing a lot in these foreclosures right now, because anyone who's bought in the recent years has had pretty good equity. Unless you bought last year, right? Because it generally takes more than a year to have equity built up in your house. But if you bought 5+ years ago, you probably have some equity there, right? So you're probably not upside down unless you've done some sort of second mortgages or refinance, cash out, something like that. You probably are going to have some equity. But some people are in a situation that they can't sell. And this is probably what I'm seeing most right now because they can't sell it to someone who's going to finance because of insurance. So maybe it needs a new roof. Maybe it has aluminum wiring and the insurance is just so expensive now. Maybe your insurance was canceled because you didn't have that new roof put on and now your forced place insurance is so expensive that it's forcing you into foreclosure. Those types of situations are more of what we're seeing right now. And there's still not a lot of them. Just so you know, there's not a huge number of foreclosures going on. There's more now than there's been in the past years, but it's still a minute amount because there was, I think 2 years ago, we had like 24 in the whole market. So there was a very, very few foreclosures. So we're still at a really small number, but there are always going to be situations where stuff happens and we have foreclosures. So if you're in that situation and you think you can't sell because you can't get insurance, you need a new roof, you need a new wiring, a good agent may be able to pull in some resources for you. I know I've worked with some clients that, look, we can get a new roof put on right before closing. I work with a local roofing company that will put that invoice to closing for me and wait till the week right before closing to put it on, just so it's less likely to fall out of escrow. So there may be an option like that, or maybe an opportunity to sell it to a cash buyer, maybe an investor that's going to flip it, things like that. And a good agent will have those resources as well. It's a different buyer, but that still could be another option that you still may be able to walk away with some cash in your pocket to get your restart. So you want to figure out situation, long-term or short-term. Is it temporary or is this a long-term thing? And then create your plan of what you're going to do to get out of this in the long run. Let's talk about a type of purchase I've seen going on a lot lately that I want to give you some caution to and make sure you understand the situation. So it's called a subject to offer or subject to contract. And what that means is it's subject to your current mortgage. So you're signing over the deed to your house. You're signing over the ownership to your house, but you're still have that mortgage in your name, and this new buyer, oftentimes a company, is saying they will start making the payments on the property. So you don't have to make the payments anymore. They're giving you some cash money normally, and they're going to start making these payments. So you're relieved of the debt, they say, and you're going to sign your deed over. So let's just talk through this a little bit. Your name's still on the mortgage, so ultimately you're still responsible for that debt. And if they stop paying, what are you going to do? Because you've already signed the deed to that house over. They own the house. That's an issue, right? Also, most of your mortgage, almost every mortgage I've ever seen, has a clause in there that says if you sell, your mortgage is due. So at any time, if your lender realizes that you have sold, they can call your mortgage due immediately. Now you've already signed the deed over, but you're still responsible for that debt. Here's another issue with these that scares me. The buyer now has insurance that they are the beneficiary, not you. A lot of times what they're doing is renting these houses out and collecting rent on them. And they're taking advantage of the low mortgage rate you had. So they are now renting the house out and they have insurance and they are the beneficiary. So the house catches on fire and burns down. They're now paid. Remember, you still are responsible for that mortgage. Even though they've been paying it, and maybe they've been paying it on time and everything's great, you're still responsible for it. But that insurance check is going to go to that buyer. How are you going to handle that situation? So these are things that I'm seeing come up a lot. We're getting a ton of subject to offers on almost every listing we have. It's become a quite nuisance with the number of them we're getting each week. I'd say we're averaging probably 8 to 10 a week. So you want to be very careful of these, especially if you are in the situation where you think that you are facing foreclosure. No, you are facing foreclosure. If it sounds too good to be true, it could be too good to be true. So reach out and get an opinion. Let's make sure you're making a good decision. You're always, of course, open to call me, or if you're not in my market and need a realtor that is not on the Gulf Coast of Florida, let me know and I will definitely put you in touch with someone to help you understand your situation and whether or not you have equity and what your options are. So ultimately here, what I really want you to walk away from is if you are in this situation, don't sit back on your heels. We got to act. We got to come up with a plan and put it into action. They are moving very fast on these foreclosures, and you may be in a better situation than you even realize. I recently had another customer call me, and they were quite nervous. Family situation, and the family member had moved into the house and was supposed to be making the house payments. They found out after 3 or 4 months when they were served notice that their house payments were not being made, and they were served a notice by an attorney. They quickly called me, and I was like, look, see if you can negotiate it. We were trying to figure out if we could put the house up for sale, how much equity they had in it. We were going through this whole process. Luckily, the bank was willing to work with them. And because they actually acted fast and got in communication and explained the situation and said, look, what can we do to catch this up? They were willing to catch it up and just wanted to be reinstated the way the loan was. And the bank was willing to do that. And they were able to resolve the situation. And they're back in a good situation. It was just a total mistake when they thought the family member was making the mortgage who was living in the house when they weren't. If you find yourself in this situation, don't sit back and do nothing. Come up with a plan and put it into action. And if you have more questions, don't forget to reach out. We're always here to help. So it's time for our home hack. Each week, I want to give you a tip, something about finances, your home, something to make it easier. This week, what I want to talk about, especially since we're talking about foreclosures, is budgeting apps. There are so many budgeting apps out there. And if you are not using one, you probably want to, especially if you find yourself facing a foreclosure situation. And what it does is help you get a good control of your finances. Where is your money going? I know I've done this a couple times where I will put my bank account connected to one of these budgeting apps just to see exactly where every penny is going. How much am I spending on going out to dinner? How much am I spending on those coffee shops? But get yourself a budgeting app. There's tons of them out there. So no matter what style you like, just look and find one that you like and really start to calculate where every penny goes. And if you want to go back old school, you could always do the envelope budgeting process. I love it. That is what I did for many, many years. And what that is, very old school, you take envelopes, you write on the front of the envelope what each one is for. And when you get paid, you put your cash in there and that's what you draw from. So you put your mortgage payment, your rent payment in one until you go pay that. Your grocery money is in one. And when that money is gone, you got to figure out how you're going to eat groceries, right? So it helps you stay on track. Maybe you set up so much for spending money, entertainment. Make sure you don't go above and beyond what you should be spending each month. It's so much easier to do with debit cards nowadays and credit cards. We just don't even realize how much we're spending. So find yourself a good budgeting app that you can keep track of all your spending. They normally tie right into your banking system. So every transaction goes in there and it will tell you, hey, you spent this much money on coffee. There's a bunch of different styles of them too. So you want to find one that connects with you, but definitely find a budgeting app and get your finances back on track and hopefully keep yourself out of foreclosure. This has been Just My Opinion. I hope you enjoyed the episode today. If you would like to never miss another episode, hit that subscribe button and we'll let you know when we release a new one each Thursday. If you have any topics or questions you would love for us to cover on the show, please send me a DM or text me, give me a phone call, email, whatever you would like. And you never know, we may just ask you to be on the show. Thanks for listening. Remember, it's just my opinion for adulting made simple.